Hi there, traders. This is Brad Gilbert with today's trading action. All right, now with a couple of things to digest. The US dollar has slid to the downside. Now, Trump has outlined reciprocal tariff plan in the latest bid to reshape the trade on his terms. Now, what he's saying is anyone that puts tariffs against us after we've put tariffs on them are they're gonna be more tariffs, right? Now, but that's the first thing. Now, secondly, this is where the big banks and the research teams have the edge. The dollar dips as inflation data points to lower core PCE. We had the PPI numbers out of the US, they were stronger. But then if you dig deeper into those numbers, apparently, it shows components of the PCE price index, a big inflation number that the Fed looks at, were weaker and are going to be weaker next month. So, you know what? The chance of a interest rate cut in the US is about 30% now. Now, that's not reflected in the Metastock data. But the other key component is why the dollar's come off is because Trump has come out and said, look, the reciprocal tariffs that I'm talking about will not be implemented immediately. If they were, the dollar would have gone up. So we've had a double dollar dip situation. Okay, the data apparently tells us that PC is going to be lower, the inflation numbers, and then also Trump's not going to put these tariffs on the country straight away. So we've seen a little bit of a clean out, right? And you look at some of these moves and you might think, wow, that's big. They aren't big by any stretch, but they're big for what we've been seeing, right? The dollar is drifting lower and we've got really uniform markets here. Okay, euro up a little bit. You know, there's still that euphoria about maybe the Ukraine war being all settled. Aussie a little bit higher, so is the Kiwi. But if you look on the sort of scheme of things, definitely the Aussie and Kiwi just tracking sideways. Dollar CAD pretty much to the commodity currencies, and you've got some movement there. If we just take a quick look at the where the markets are, right? The US Treasury yields. Let me just change that color so you can see it. Yields, okay. The long dated bonds a little bit lower, just a little bit of pressure off the dollar, off interest rates, and that's seeing the equity markets. They've been waiting for an upside day, and that's where I know these scales or tables have just been reset at the end of 5 p.m. New York, but we did have a risk on day, right? Equities up, euro, sterling, Aussie, Kiwi up, dollar off, right? So that's where we are. Now, when you look at this is the trap. You're like, oh my God, this is amazing. Like the dollar's falling, euro's going up, sterling's going up. You need to be objective. And what I'm talking about is if I get our analysis up here, right? The prime time analysis, okay. And actually, let me go to the main page and I'll just show you this because if you're looking at this objectively and looking at momentum and the short-term, long-term trends, right, we are getting a bearish signal here on euro, sterling, Aussie, Kiwi, right? Now, they've all just gone up, right, on this news. But don't get suckered into the short-term move. Overall, these things are still going down. And it's the same for the dollar pairs, right? They are all sliding to the downside just on this news. But overall, dollar CAD and dollar yen still have a very, very bullish setup, right? And if I come back to the trade hub, right, and if I just scroll down here, the pairs that are basically active now, and this is no surprise, right? Because when the markets turn on an event, right, you often get the whole market lighting up, right? And that's where you don't have to sort of go cherry picking things. You've got lots of opportunities here across the board. It's all about the timing and just trying to factor in because the human sort of brain or emotion will go, oh yeah, euro's up. They're all going up. Let's get on board. But this is where the benefit of objective analysis comes into play and you can see where the real opportunities are. Now, next week's CPI number, it's a bit of a way off, right? So there's plenty of time for these instruments to work around. All I'm saying is check out your analysis. If you were looking to get long, say euro, sterling, Aussie, Kiwi, you might want to just check the rest of your analysis and make sure it lines up. Okay. It doesn't mean that move doesn't continue, but what you want to do is be objective and look for the opportunity. Now, where's the opportunities today? If we come into Friday here, just at the start of the Asian day, we got some employment numbers, a few residual numbers out of the States. I'll be interested to see what the retail sales figures are and the manufacturing sales, etc., out of Canada. These are a couple of key numbers. can't see there. I've just covered it up. Industrial production numbers there out of the US as well. So you got a few numbers to sort of put into the economic system and see what happens. But right now, we've got peripheral data coming out, may give us some sort of little bit of insight. Keep an eye on the employment GDP numbers out of the Eurozone. It's a bit of a stretch whether they impact the market. The US numbers might have a little bit more luck, but it's not like CPI or employment, right? If you're sitting there waiting for some big number to drop and you're going to get long or short, well, you want to be sort of getting your technicals sorted first of all. Redraw your trend lines, try and work out where the trends are, and compare those to where the long-term trends are, right? We are starting to see, a little bit of a break here on the top side on Euro, Sterling, okay, Aussie, Kiwi. Now, you might get some stops triggered here, but these things are starting to get really stretched. And you know what? We'll see how they go from here. But it's a long way until they turn into bullish modes. And that's when it gets above that yellow line, the bull bear pivot line. Anyway, check your analysis. The markets aren't exactly what they look like, right? Is what I'm getting to. Looking at the interest rate probabilities, I was looking at some of these things. This table isn't updating frequently enough, right? 96% no chance. Well, that's increased to about 33% chance apparently for a cut. The Reserve Bank of Australia, they have got here an 89% chance of 0.25. I can tell you that a 50 basis point move has been factored into the market or partially factored in. So the Aussie data next week is going to be very active. All right. Okay, guys, that's pretty much a bit of a wrap. Obviously, we've got to keep an eye on the Don, right? He controls the timing of these decisions. All we can do is work on the fundamental aspects. Hopefully the Don's comments fit in with that. One thing that would be of note, if he starts to give us a clear date for when these reciprocal tariffs will come into play, and if he says like it's next week, we might see a dollar move to the top side. And that's what I'm talking about, right? You get a dollar move to the top side, and then that's going to turn Euro, Sterling, Aussie, Kiwi down. And these things are already going down, right? So that is the move for me. I'll be looking for that to get into multiple trades. All right, guys, that's it for me. Hopefully we'll get this analysis automated. Got a few things in the pipeline, but we'll give you more updates as we go forward from here. All right, guys, have a good one. All the best. Cheerio.